What is going on, trade bros? It is your trade bro here, coming at you from the Bitcoin Daily Chart as we always do. Been a bit of a break in the uploads. Been uploading some shorts. I'm gonna be chopping up some other content and putting it up there for you guys to digest. Always keep an eye on that. Let's get right into it. Yesterday we had a little bit of an exciting day. As you can see, we pushed up to the 35,900 level, sort of where we hit with this wick again, and now we're consolidating right about here, possibly building out some levels at that new price. Now the reason a lot of people think that this happened was because the open interest on Bitcoin, which, if you guys don't know, is the open contracts for any sort of derivatives, whether that be options or futures, hit 15 billion, a majority of the derivatives being bullish, after traders on Binance, who were more bearish than the traders on Bybit, were liquidated at local lows to the tune of about $350 million got liquidated yesterday, which gave us this wick, and we're going to pop down to the 4-hour chart so we can get a bit of what we're seeing here. So we had this top out here, just like that, came back down, we're settled about half. We're going to see if we can maintain this 35,000 level. I don't think, like some other analysts think, that 36,000 is in the cards for this week, but who knows? If we maintain this 35,000 level, we can definitely see it pushing into the future. That's it for the charts. As you can see, we've just kind of been consolidating and rising after that big top up that we had to just below 36,000, but we're looking good here. We're still in the trade, holding long here, accumulating as much as we can. Moving over to some new articles. The IRS is trying to push more crypto surveillance and trying to make it so they can more easily take people's crypto. They are trying to pass this off, as they always do, that they're doing this to get in front of crime when it comes, but we all know that sometimes they get it wrong, and sometimes they're doing it for their own interests, as the U.S. government commonly does. There is a bit of this article I wanted to show you guys. So, this breaks down how much they forfeited, how much they've taken in assets. I don't know if this is particularly crypto, but the administrative basically means that they didn't have a judge say, put the order that the property should be forfeited. Right up here, this is where it says. The problem is what referred to as administrative forfeiture. As Nick Sabilla explained in Forbes, the report comes out under administrative or non-judicial forfeiture. The seizing agency, not a judge, decides whether property should be forfeited. In other words, agencies do not need to prove to a judge that a crime was committed in order to seize property, which means that they do not have to prove it's a crime, and they don't even have to have anything proved. They can just be a suspicion, and they can take it. And as you can see, 78% of its forfeitures have been this style. So expect this happening in crypto too. Whether they use it for the right purpose or not is yet to be seen. But like it says here, it's important to stress these confiscations do not have to start with an actual crime being committed, just a mere suspicion. Given how misunderstandings surrounding cryptocurrency have fueled headlines, it's not difficult to imagine how such suspicions could emerge. For example, it's less than a month ago that 100 members of Congress cited a flawed report to call for a crackdown on crypto, meaning that 100 members of Congress cited a bad report that was false and still ordered a crackdown on crypto. So we have to be aware of this, guys. Always keep yourself safe. Keep your coins as far off of exchange. If you're holding long, keep your coins as far off of exchanges as possible. Of course, if crimes are being committed and fraud is being committed, then we want people to be, the victims to be made whole and the perpetrators to be punished. But with the system the way it is, off of suspicions and bad data, it is best to keep yourself as safe as possible. Moving into the next article. The Security and Exchange Commission's Inspector General says prohibition on crypto ownership hinders agency hiring. So the Inspector General basically did an overview of the SEC's most serious management performance challenges, and crypto is, obviously on the list. The office said that the agency's previous statements on the lack of disclosure and widespread non-compliance with existing security laws by crypto asset market participants was rampant, which if you don't have any sort of regulation, it's hard to stick to it. It's hard for the participants to stick to it if it doesn't exist. Like they said, the existing law leaves gaps and oversights related to crypto assets that are not securities and certain stablecoins. They have been called for comprehensive legislation and interagency coordination. And addition, the report says case law concerning the application of security laws to crypto assets is limited and still developing. So if you're going to say this, that it's limited and still developing, how can you say that people aren't abiding by it if it basically doesn't exist? If you're just using the Howey law, it leaves massive holes in it when companies are trying to move forward. The SEC in this case, I think Gary Gensler should be put in jail for what he's done to the U.S. crypto markets. If you guys don't know, I have a history in trading stocks, options, and futures. The U.S. has the most advanced stock options and futures markets in the world. European options are a mess. Markets in Europe are a mess. It is streamlined in the U.S., but in the case of crypto, we have fallen massively behind because they won't put the green light on this, which has cost people lots of money by opportunity costs. If you're not able to partake in the opportunity, then you are losing money. And this is what the SEC has done. They further said that employment issues at the SEC are rampant as they try to add crypto special conditions to its examinations, tradings, and markets enforcement divisions. They're not able to get new people in there because they can't entice people away from already existing institutions, and people do not want to divest from their crypto assets to work for the SEC. You cannot own crypto and work for the SEC, so nobody that knows anything about crypto is willing to go work for the SEC knowing that they're going to lose money. The SEC is not going to pay what you couldn't, especially if you're an intelligent person with a decent job understanding crypto to the point that the SEC is willing to hire you. Then you're going to make more money holding crypto than you would working for the SEC. And if you know a lot about crypto, you're probably not too fond of the SEC either. Moving on. Stuart Aldertoy. The SEC says that the SEC's Office of Inspector General's report is worth a read. Besides the embarrassment of that performance review, the OIG concludes that there is uncertainty whether the SEC even has jurisdiction over crypto. And this is the SEC's Inspector General, so top on the beat talking. So this is not some outside source, it's not some random guy on Twitter saying this. This is an agency within the SEC saying that they may not have jurisdiction over crypto. This is yet to be seen. Yeah, so that's it for that article. This is moving into the $15 billion in open interest that we talked about earlier. It's the highest level that we've seen in over 6 months. and a lot of analysts, like I said earlier, are saying that we may not see Bitcoin over 36,000. Never know. That's an old chart. Let's see. Almost, yep. So today we had, this was yesterday, we had $350 million in open interest added today. That's quite a bit. We're almost at 16 billion at the time of writing for data from CoinGlass. We have 105,000 BTC contract open, valued at roughly almost $4 billion. Binance has edged past this. Like I said, the action on Binance has been bearish to bullish, whereas the everything on Bybit has been quite bullish. So two big market participants going at it. I think people loading up on short Bitcoin positions are either people that don't like Bitcoin, or think because we haven't seen a huge green dildo candle that we're headed down. We're building out a lot of levels at these points and making these levels a lot stronger on the chart by adding more. People are buying more and more Bitcoin and holding the Bitcoin at these levels, making the level stronger on the chart. The open interest on Bitcoin futures ramping up. Certain names taking significant positions, but it's unclear whether they're going long or short. People are trying to say that we might see in analysis. He suggested that OI is in a territory that had previously seen a 20% Bitcoin price drawdown. Historically, whenever this metric passes 12.2 billion, it resulted in a minimum 20% decline on a Bitcoin price. We'll go back to the chart and see what 20% down would look like. Continuing coverage, popular trader skew reference a significance of current price levels on low time frame. Whoever is wrong on direction would face difficulty fueling a potential volatile price reaction. Looking like a short covering bounce here, yes, because Bitcoin was above the 34,800 low. Like I said before, a lot of people loaded up on shorts at local lows, so they got liquidated there yesterday. Like he says here, whoever is wrong here will get humbled. This usually leads to a sharp price reaction. From what I can see, shorts scaled into the sell-off and longs filled aggressively. I don't know where he gets these charts. Let's pop over here real quick. Maybe we can get a better view of the chart that he's pulling out. Okay, yeah. So this is Bybit. Okay, so we can see, yeah. The whole day we kind of ramped down here, and they tried real hard to get that, but it liquidated and went straight up. This is kind of after the fact, after it went up. But it's a good chart to see the open interest building up. Okay. Looking ahead, monitoring resource material indicators conclude that 36 will remain the ceiling for the time being. Calling a local top of 36,000 doesn't mean that 36K is off the table this year, but the metrics I'm looking at would indicate that at the very least it's off the table this week, it said in a November 6th analysis on X. That call doesn't mean that price will free fall back to the 25K range, but if a bull breakup isn't validated this month, then that low range is critical. I tend to agree with this. If we don't see, let's go to the weekly. So last week we had a doji after these two big green candles. Tried to get pushed out. We stayed here. So there would be a case for a slight reversal. If we went 20% down, let's see what that would look like. 20% would be pretty big, but let's just see what that looks like. Yeah, 20%. So 20%. I don't know. 20% is big. These moves were big moves. You can see we were here. We've been trading at this range, trying to get above this line since March. So this move is big. For it to go all the way back down 20%, I think you'd need something more than just a lot of shorts. I think the overall market sentiment is pretty big, with just the ETF hype, obviously, and what that's going to do to the metrics, and then the halving coming up as well. Like we said before, most natural sellers of Bitcoin at this price are miners, and as the price rises, Bitcoin miners are going to have to sell less to cover their expenses. And once the halving does happen, that's half as much Bitcoin being sold on the market, and the price is probably going to be higher around the halving. So you have those two actual metrics of the supply of Bitcoin, and then demand is also going to go up as people keep pushing this on the news, as the ETF comes out and as prices stay high. So yes, we're looking at when we failed out here. The candles didn't really look as strong. We had a really small doji, and then we got smashed down. You can tell just by the way the wicks and the bodies are looking here that it was very bear controlled here, and just the pop up here we got smashed back down. So maybe we build our levels, maybe we come back down a little bit. So I'd be very careful trading right now because we're not in clear motion. But maybe we get a pop above 36. That would be good, and if we don't, we take profits. If we start seeing a reversal, we take profits, we get out, we wait for the reversal to end, we put in a new trade, and we keep riding it up. I hope you guys are staying safe in the market. I hope you guys are staying informed. Again, nothing on this channel is financial advice. It was great to see you guys again, and I'll see you in the next video.